The market listens closely, especially if there are hints about future interest rates or economic outlook. 3M gained after the company raised its full-year profit forecasts. On the bullish side, we're watching the 6,385. Welcome to the weekly market breakdown. I'm Isa Martinez, trader and market analyst at xChief. In today's episode, we'll dissect the latest technical setups on the dollar index, S&P 500, Euro USD, and Bitcoin, especially after the historic breakout we've just witnessed. With key macroeconomic developments and new crypto legislation on the table, this analysis could help you navigate the markets more confidently this week. Let's dive in. We will start as always with the economic calendar. Don't forget the hours you're going to see are based on GMT -5, which is applied to Quito, Lima, and Bogota, and is also related to the New York trading session. Starting on Tuesday at 8:30 a.m., all eyes will be on Fed Chair Powell's speech. Anytime the head of the Federal Reserve speaks, the market listens closely, especially if there are hints about future interest rates or economic outlook. On Wednesday at 9 a.m., we'll get the existing home sales data from June. This number tells us how many homes were sold last month and helps us understand the strength of the housing market. Then at 9:30 a.m., crude oil inventories will be released. This is key for traders in oil and energy markets as it shows how much oil is being stored and can impact oil prices. Thursday is loaded with high-impact news, starting at 7:15 a.m. with two key decisions from the European Central Bank. We'll hear the deposit facility rate, followed immediately by the ECB's interest rate decision. These two data points tell us what direction the ECB wants to take for the euro and European economy. Then at 7:30 a.m. we'll see the initial jobless claims in the US, which shows how many people filed for unemployment. It's a direct measure of how healthy or weak the job market is. At 7:45 a.m., the ECB will hold its press conference. This is where we might hear more details about their decision and the future outlook for the Eurozone. Then at 8:45 a.m., we'll get two important PMIs from the US, manufacturing and services. These numbers show us how businesses are doing in both the factory and service sectors. Finally, at 9 a.m., new home sales will be released. This number shows how many new homes were sold and gives a clue about consumer demand and the housing market's momentum. To finish the week on Friday at 7:30 a.m., we have the durable goods orders report for June. This shows us how much people and businesses are spending on big items like machinery, appliances, and vehicles. It's a great way to measure confidence and investment in the economy. All these events could bring big opportunities and big volatility, so stay sharp and trade wisely. And now let's talk about the fundamentals. This week the S&P 500 posted a weekly gain despite finishing flat on Friday after the Financial Times reported that President Trump is considering imposing tariffs between 15 and 20% on goods imported from the European Union. Even if a deal is reached, the proposed tariff would exceed the 10% expected by the European Union, suggesting that negotiations may have stalled. With the August 1st deadline approaching, Trump appears to be ramping up pressure on the bloc to secure deeper concessions. On the earnings front, markets reacted positively to the early stages of the earnings season. American Express shares rose after beating profit estimates, supported by strong spending from affluent card holders. 3M gained after the company raised its full-year profit forecasts, driven by cost-cutting and a focus on high-margin products. Meanwhile, Netflix delivered solid earnings and raised its annual revenue outlook, but the stock dipped slightly as results failed to meet high analyst expectations. Still, Netflix is up over 43% so far this year, driven by optimism over its dominant position in streaming. Looking ahead, next week will bring major earnings from Coca-Cola, Texas Instruments, Alphabet, and Tesla, all of which could add further volatility to the markets. In economic data, the University of Michigan's Consumer Sentiment Index rose to 61.8, beating forecasts, while one-year inflation expectations eased from 5% to 4.4%. On Thursday, retail sales came in stronger than expected, and weekly jobless claims were lower than forecasts. Inflation remained broadly in line with expectations, though tariffs seem to be causing price increases in some categories. Against this backdrop, the Federal Reserve continues to take a wait-and-see approach on interest rates. However, Fed Governor Christopher Waller suggested that a rate cut might be justified as early as the upcoming meeting, citing rising economic risks. All of this keeps traders and investors alert, as each new economic figure and central bank statement can impact the dollar, equity indices, and major assets like gold and Bitcoin. And while markets react to geopolitical tensions and earning reports, a historic shift is also unfolding in the crypto world, one that could reshape the future of digital finance in the United States and beyond. And this is because Trump signed into law the Genius Act, which regulates stablecoins pegged to the US dollar. The law requires issuers like Tether and Circle to fully back their tokens with liquid assets such as cash and short-term treasury bonds. They must also disclose their reserves regularly and implement anti-money laundering measures. Trump described the law as a major step to strengthen the dollar's dominance in digital finance and called it a great day for crypto and America. The Genius Act is part of a broader push led by Trump to make the US the global leader in digital assets. Two other crypto-related bills were also passed by the House this week. Clarity, which aims to clearly define the regulatory scope of digital assets, and the anti-CBDC bill, which would ban central bank digital currencies. Trump made clear he opposes the creation of a US CBDC, aligning with the crypto industry's concerns about financial control and privacy. His speech emphasized that crypto is just getting started and that the industry will grow faster than anyone expected. With the Genius Act, the US is positioning itself to compete globally in crypto innovation while reinforcing the demand for US treasuries through stable coins. We now begin with the technical analysis of the most important assets we review week after week. And of course, we'll start with the DXY, the US dollar index, which represents dollar strength. It's crucial to understand what has been happening over the past few days. We've seen that dollar strength continues to rise, maintaining these recovery structure. For us, a key level that could signal a shift from a bearish structure to a bullish one is a confirmed breakout above 99.421. If the price manages to break through that level, we would then expect a pullback, which could provide an opportunity to enter the market and take advantage of the upward momentum that may follow. Keep in mind, this analysis also applies to any asset that trades against the dollar. If the US strengthens, then dollar-denominated pairs or assets that move inversely to the dollar would likely weaken. As long as the current economic outlook continues to favor the dollar and this upward movement is sustained, we will maintain a bullish bias with our next key target at the 99.421 level going into next week. And if you are bearish with the DXY, we should focus on levels like 98.099, 97.714, and the final level to watch this week, 97.271. Let's now move on to the S&P 500. We've been maintaining a clearly bullish structure, and we've also confirmed that the price has reached one of the targets that we had projected using Fibonacci levels, which is the target located at 6,291. The next step would be to confirm whether a pullback or a correction might happen soon, which could offer entry opportunities for those looking to join the trend. That said, I want to emphasize caution at this point. While the price can continue to rise, we are currently at all-time highs, so this may not be the best moment to enter new long positions. If you are considering going long or placing any kind of buy trade, please understand that you are entering at a high risk level. For this week, we are keeping our downside targets at 6,201 as the first correction level and 6,132 as the next support zone. On the bullish side, we are watching the 6,385 level, or next projected resistance, as a potential area where price could reach. That zone may experience market manipulation, and from there we could see a correction or at least a consolidation range before the S&P 500 resumes its upward movement. Now let's move on to the euro, where we can clearly see that the bullish movement is still in play, strongly correlated with the movement driven by dollar strength. We need to understand that if this current trend continues, we could be targeting the 1.14463 level. A break below that level would likely signal a shift in structure from bullish to bearish. If this breakdown happens with strong momentum, which is not yet imminent, it could suggest that the euro is starting a deeper downtrend. Should the price break that level with conviction, we could then expect further bearish targets for the euro. On the upside, I'd like to highlight the following key resistance levels at 1.16720, 1.17216, and 1.18299 as possible zones where the price may move higher and from which it could reverse to the downside. If you are currently trading Euro USD or any asset correlated to it, please take into account the current behavior of the dollar and the fundamentals we've previously discussed. The strength of the dollar is a key driver that will heavily influence these assets' next moves. We will wrap up the analysis with Bitcoin, where several new liquidity zones have appeared. If we maintain a bullish outlook, we can mark two key upside targets. The first one is located here. At 120,320 as the first zone, and 122,757 level. It's highly likely that a new all-time high could be established from there if we reach a breakout from this point. On the bearish side, we need to proceed with caution. The price has shown several manipulative moves throughout the week. Two good examples are located here. This manipulation we had 117,469, and there was other clear manipulation here at $120,000, both clear signs of liquidity grabs. So based on current liquidity, our downside targets for this week are 116,892 as the first support zone, followed by 115,697. We're also maintaining the bearish target from last week in case the correction deepens. 140,500, 112,400, and 110,500. Thank you for watching. If you found this analysis valuable, make sure to like this video, subscribe to our channel, and activate notifications so you never miss a market update. For those ready to take their trading to the next level, don't forget to register at www.xChief.com and explore our powerful trading tools and resources. Until next time, trade smart and see you in the markets.